Asia-Pacific markets are rebounding after Friday's sell-off, and they are now all in the green. The Nikkei in Japan is up 0.34%. The Kospi in South Korea is up 0.77%, and the Hang Seg in Hong Kong is up as much as 1.8%. That's also as China's 1-year and 5-year loan prime rates were left unchanged at 3.45% and 3.95% respectively. The 5-year LPR acts as the peg for most property mortgages. On Friday, we saw markets in the region were tumbling after Israel launched a strike at Iran, causing stocks to fall, but also safe haven assets to spike. Investors now are also looking to fresh macroeconomic data points out of China, Japan, and South Korea this coming week. Tim Waterer is the Chief Market Analyst at KCM Trade, and he joins us now live from Shanghai, China. Good to be with you. Tim, is this a technical rebound we are seeing in Asian markets after Friday, in your opinion, or something else?
Good to be with you, Ludovica. Yeah, I think there is a technical element to what we're seeing today. Nice to see stocks heading a little bit higher because they were under the pump last week. So I think traders are seeing a little bit of value there, and that's contributing to the rises that we are seeing across the Asian markets today. Looking ahead, we do have some key pieces of data coming up, though. Markets remaining very sensitive to the interest rate outlook. So we'll be looking at the US GDP figures this week and also that core PCE number on Friday, which is critical. So if we did happen to see any upside beats there, that could cause some hesitation among traders if that rate cut timeline looks to be extended a little bit further. So a little bit of data to navigate through for investors this week.
Interesting. So data-heavy week for investors, especially in Asia. Let's speak about the property sector in China. We know all the problems it had in the near past. We saw China's leaving the loan prime rates unchanged. Why? What is this signaling for what concerns the property market especially?
Yeah, so the 1-year and the 5-year LPR left unchanged today. No surprise there. I think what is signaling is that the data has shown some tentative signs of improvement. We saw some better GDP figures last week. However, the industrial production and retail sales did miss the mark. So it's a little bit of a mixed bag there. But I think there could be some hesitation on the part of the PBOC to perhaps cut those rates right now, given the potential implications for the Chinese yuan. Of course, the US dollar very strong at the moment, up 4.5% year to date. And so if the PBOC were to cut some of those key lending rates, that could put some further pressure on the yuan. So I think that's causing a little bit of hesitation there at the moment. But I think there is scope for further cuts in interest rates if we did see a further deterioration in the economic conditions in China in coming months.
Very interesting, Tim. What's the inflationary outlook in China? Can you help us understand why is this outlook different than the other major economies around the world?
Well, that's right. Many other economies trying to bring down inflation, the opposite problem in China at the moment. I think it all stems back to that property sector, as you alluded to. The property sector has an oversized impact on the overall economic performance in China. It accounts for more than 1/4 of GDP. And so with the property sector struggling, that's causing some hesitation when it comes to consumer demand. So it's really lackluster demand, which is why we saw the most recent CPI in China come in at just 0.1%. So I think in terms of what potential remedies could be put in place, I think obviously China could be facing some headwinds from say US tariffs, for example, on steel products. So there'll be focus on picking up the domestic economy. I think if you shore up the property sector, maybe you convince people that they're a little bit more comfortable to start spending money again. They can see inflation higher. So I think it all comes back to that property sector. I know there are steps being made to try and shore it up, but a little bit more work needed there, I think, before we start seeing inflation ticking higher on a regular basis.
Very interesting, brilliant analysis. Thank you very much, Tim Waterer, there for us.
My pleasure. Thank you.